All right. Hello, everyone, and thank you for joining us throughout the day here at the Lytham Partners Fall 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. I'm extremely pleased to be joined today by Rob Brown. Rob is a Senior Research Analyst and Founding Partner from Lake Street Capital Markets, who covers the industrial growth and energy technology space there at the company. This is Rob's second time joining us throughout one of our conferences. Rob, thanks so much for coming back.
Hi, Robert. Thanks for having me.
Absolutely. For those that may have missed the last time that you joined us, talk a little bit about your coverage universe so people have an idea of where your focus is.
Great. So I cover companies involved in really the energy transition, kind of around a clean tech focus and a shift to some of the macro trends happening in energy that we'll talk about. Also, companies around energy use, pollution control, and also some nuclear related companies.
So let's sort of jump into it there. Talk about some of maybe the macro themes that you're seeing for both energy transition and clean tech here in 2024.
Yeah, and I think these macro themes affect really the clean tech and some of the traditional energy markets. But I think the biggest theme we've seen, and it's starting in 24 and really I think going to continue, is increasing electricity demand. So people might not realize, but for the last 20 years, total electricity demand has been flat. Starting in about 2000, for 50 years before that, it grew at GDP or a little bit better, and then has flattened out for the last 20 years. And so that has driven really minimal kind of need for new power, and really all the activity has been in shifting from certain sources like coal to renewable sources and natural gas. So that's driven some things. But really, I think what's happening now is there's a view and a belief that there's going to be an increase in total electricity demand and usage, and so that's being driven by data centers and AI in particular, as well as EV electric vehicle ramp in power demand. So there's an expectation of increased power demand, and that's driving a number of macro trends happening really around new power generation and growth in renewables and traditional energy.
What has sort of been that shift from some traditional to some of the renewables here? And maybe just can you break that down a little bit further?
Yeah, so there's really two or three shifts going on. One was government action is pushing the overall use of solar. There's a bunch of incentives that have taken place that have flowed through, and that's driving utility scale solar in particular. And then there is also really IRA related legislation that's put incentives in place for renewable type, really solar and wind. And there's sort of been an overall increase in the percentage of solar and wind. There's also been an effort to grow overall, or really it's a realization, it hasn't started yet, but to grow, if you're going to see new growth in power demand, and you need to do it in a way that's has zero carbon emissions, it really brings you to nuclear as the only really scale way to do that. And so there's been a realization amongst the investment community over the last 18 months that that's going to happen. That there's new public companies that came public with SPACs, and then there's efforts on other companies to ramp nuclear, which is really atrophied over the last decade or so.
Yeah. I think you mentioned sort of the transportation. Maybe what are some of the trends you're seeing with heavy duty transportation market in that market in particular? Some of the trends there.
Yeah, I think that's another big macro trend. There's really driven by California. The advanced clean truck plan is pushing for zero emission vehicles in the trucking sector, and that is really electric vehicles and hydrogen powered vehicles. The market itself has adopted natural gas fueled vehicles, but the clean truck regulations right now don't include natural gas or renewable natural gas. I think that could change. But what's interesting now is that California, as starting in 2024, has percentage of the sales requirements that the trucks need to OEMs need to meet, and those increase between now and 2035. And so that's getting started. I think you're starting to see that in the marketplace, and it's not clear yet how how well that's being adopted and some of the impacts, but it has driven OEMs to develop electric battery powered truck options. And then there's a effort to design and engineer, haven't been introduced into the market, but hydrogen fueled vehicles. But that has been a bit of a mixed demand picture. Ballard recently who manufactures fuel cells recently sort of slowed their expectations for market adoption.
Everything that you're sort of talking about here has some level of regulatory policy change that generally impacts it. I think you mentioned IRA, you mentioned California. What are some of the biggest regulatory policy changes out there that's driving sort of this, the broader sector that you're referring to here?
Yeah, I think the sort of the biggest change that's happened, it's in place, is the Inflation Reduction Act included a number of different incentive vehicles to create incentives for various types of clean tech sectors. That's been a driver for a lot of this activity. But what it's also done is there's some uncertainty in some of the levels of the tax credits and how they're flowing. So that's actually slowed things until that gets sorted out in the hydrogen market and in the renewable natural gas market. So there's some uncertainty happening, but that legislation has been approved, and I think that's going to start to flow. I don't think that's there's some risk with an election change, but since it's been approved already, there's less risk there. The other regulatory or government-related action that's happening in the nuclear space is there was a significant series of bills passed to do a couple things, but primarily to incent a U.S. market development for enrichment, and because today much of the enrichment is supplied from Russia, and so there's a sort of a two-pronged effort to both build U.S. capacity and then to ban Russian imports once the U.S. capacity is in place.
All right. Sort of diving a little bit deeper here. What within your sort of coverage universe here, what's drawn the most interest from investors, right? Is it sort of just some of the trends that you're talking about? Is it companies that are maybe managing their balance sheets more effectively? And maybe we can dive into some of the valuation changes as well. But let's sort of talk about where most of the interest from your universe is from investors.
Yeah, I think right now most of the interest is being driven by the derivatives for new power generation needs, and that's driven by AI data center demand. I think that's the hottest, most interesting area right now in terms of activity and interest. That that really, in my world, flows into the actual power generation situations. There's a company I cover that actually builds the power plants, so that's gotten a fair amount of investor interest. But really, it's derivatives on this broader trend has gotten interest. Some of these other trends I talked about have been a bit in a wait and see mode because of some of the delays. So I think investor interest is lower there in terms of hydrogen and in terms of renewable natural gas. But I do think that's a trend that 2025 could see some changes in terms of renewable natural gas.
Your coverage universe ranges from what on a market cap, from up size wise, just to put perspective here for viewers.
Yeah, I cover primarily small cap companies, Russell 2000, and some even smaller. But the market cap, probably the largest market cap, is about 10 billion. That's enterprise value. That's chart industries, and then I cover a number of smaller ones as well. But it's really I would say it focuses sub 2 billion market cap.
So obviously, a lot of companies in that space have been sort of challenged, right, by interest rate increases here and access to capital. What has investor sentiment been towards companies that are sort of profitable, producing cash flows versus those that are sort of investment modes and still burning cash?
Yeah, I think so. A couple legs there is one path would be companies with debt. Obviously, interest rates being up has weighed on the interest there, or the interest level, or the valuations. I think the cash flow generating businesses with debt obviously have more flexibility. I think companies that obviously have debt and maybe a longer path that can really hurt the stocks. So I think investor willingness to sort of tolerate debt is decreased. I think in terms of access to capital, probably this year and even last year, but compared to maybe in the past, there was a lot less tolerance for investment mode and growth and losses. I think there's definitely more of a valuation and interest in companies that generate profits and can see growth profitably. So there's less tolerance for losing companies in development stages.
Yeah, no, we're certainly seeing that across the board with almost every industry there. From a valuation standpoint, have there been, in connection maybe with interest rate changes or just sort of growth outlooks for different companies here? Are you seeing sort of step changes in valuations? Have you adjusted your valuation metrics on companies that you cover, given sort of the macro environment here lately?
Yeah, I think there definitely has been changes, and it's a bit dependent on the sector. I think the sectors where you've seen this growth and interest in expectation for growth in power demand, and that would be in the generation and the electrical infrastructure. Those valuations have increased. Those valuations have moved up maybe toward the high end of the range. Companies where there's some delays and some longer activity or some macro pressure that the valuations come in down to the low end of the range, and so I think it's really a reflection on the macro activity that's more near term.
So sort of, looking at this, you talked about the power generation companies. You're seeing sort of increased interest there. Some of the I want to call them project companies, but companies that are still sort of trying to prove things out, maybe a little less there. From sort of an operating income standpoint, maybe a margin standpoint, are you seeing expansion, especially within the generation names, or where are sort of margins in general been? Is there any sort of compression that you're seeing across the board, or are they being able to expand in sort of this this growth environment right now?
Yeah, I think margins have really, most companies have worked through the supply chain and inflation impacts to the margins, and they've sort of, I would say, normalized relative to history. So that's generally been the case. I would say I have not seen margin expansion beyond normal for these areas that are seeing demand. I think they've sort of used that to recover to where they were, and they've managed the inflationary pressures and supply chain. Is really what's happened. I would say the areas where you see margin degradation are really the subscale situations. So the emerging companies that are really carrying a lot of costs and not much revenue. That's where you've seen the margin degradation, and that's probably gotten worse as some of these investments have started for the coming. Some of these coming trends, the longer term trends, but the revenue hasn't flown through yet. So I would say in general, margins have largely recovered from the inflation pressures, and the startup ones are a little harder to sort of peg.
When you think about sort of your coverage universe here and maybe some of the biggest risk factors, maybe it's geopolitical, maybe it's the election. Talk about what you see as some of the biggest risk factors to your coverage universe.
Yeah, I think the election sort of impacts sentiment a little bit in terms of the clean tech names. The more developmental or CO2 reduction focused, obviously within are more supported by the Democratic side and maybe less so by the Republican side. But I would say so. There's a sentiment risk there, I guess, in the political. On the geopolitical side, it's actually helped some of the nuclear companies, frankly. But that's definitely an area that with geopolitics around Russia. And their position in the uranium market, or sorry, the uranium enrichment market, that's definitely been an area. But I think the main risk here is around the traditional risks in terms of and some of the competitive risks in these markets, and then some of the timing risks around execution of many of these kind of projects. So often, in the clean tech area, there are large kind of capital projects, and those tend to have a lot of things that can impact their timing. So I think some of the execution risks are always relevant in these companies.
Your outlook here, right? I mean, I know you cover a lot of companies, a lot of sort of subsectors of some segments of of this sort of broader industry that we're talking about here. But I guess if you were to sort of put a prediction here, and an election may be the biggest variable in all of that, but if you sort of look out 6 to 12 months here, what's sort of your prediction for your universe, and sort of the the one or two key areas that you think investors should really be focusing on, or companies, or sort of without maybe going into specific companies or sectors within it that you think people should really be paying attention to?
Yeah, I think the electricity demand is going to continue to be a theme in the next couple of years, and really drive a lot of that's going to start to drive the revenues and the activity in the companies. So I think that's an area that's going to be continue to be positive tailwinds. I think the transportation, some of these alternative fuels and technologies in the transportation market are going to come back into focus over the next year or two as these clean truck rules start to bite from California. And I think RNG is something that's sort of set to come back into investor attention. Right now, it's not part of the clean truck rules, but I think that's an area that's got a practical element to it and a cost savings element. And I think likely to see some more attention. And I think LNG export sort of related companies that have the government paused that some of those export facilities, or really paused the licensing of new ones, and I think that's going to come back as some of those global macro trends toward energy security continue. So I think some of these a bit out of favor areas will come back in the next couple of years.
Just we're just sort of wrapping up here, but is there much of a difference domestic here in the U.S. versus some of the international activity? I don't know your universe, how much of it has exposure internationally versus domestic, but what differences, if anything, are you seeing U.S. versus international here?
Yeah, I think that there's definitely differences in international markets versus the U.S. I think some of the IRA legislation and some of the investments that the government has or tax credits they put in have really helped the U.S. market accelerate. I think there's so you get into some of the details. It obviously is very dependent on individual trends and individual markets, but I do think there are differences, and it's sort of dependent on what's happening. But certainly China has its own unique elements, and then Europe I think will continue to have a bit of its own unique elements around energy security and natural gas availability. But so I think many of the companies I cover do have international exposure, and then sort of are impacted by these trends. But I think I think overall they tend to point in the same direction, but not always, obviously. So it's a bit specific to the company situation.
All right, excellent. No, that's helpful. Any sort of maybe final takeaways for investors, and then also remind them how to get a hold of yourself in case they have follow-up questions and want to speak to you more about your coverage universe.
Yeah, that'd be great. No, I think that's the kind of summation, as I would say it. Some of these macro trends are certainly continuing to be positive for this industry. I think it's going to drive things in terms of growth over the next couple of years, and then some of these IRA legislation tax credits get sorted out. I think that's going to drive certain of the segments as well. I can be reached at my email is rob.brown@lakestreetcm.com is a good way to get a hold of me, and love to chat with anybody.
Absolutely. All right. Well, Rob, again, thank you so much for the time here. Definitely found it informative. Again, investors, please reach out to Rob with any follow-up questions you might have, or again, I'm happy to make the connection as well. You can email me. It's Blum, BLUM @lythampartners.com, and happy to coordinate an introduction. So Rob, again, thanks so much for the time today. To everyone watching here, we have a number of additional presentations coming up throughout the day, additional analyst sort of discussions throughout the day, keynote panels, and various other topics. So visit the website. That's lythampartners.com/fall 2024. From there, you can access all the events. So Rob, again, thanks so much for the conference. We hope you enjoy it.
Thanks for having me.